What is up, my friends? Welcome to my channel. And so here's my portfolio. And as you guys know, I have currently started selling puts. And so let me show you guys what puts I sold today and what puts I'm still in. For example, this put on Amazon. And so this put on Amazon has a strike price of $230, while currently the price of Amazon stock is at $241 and 42 cents. So if by Friday the price is still above $230, this put should be profitable on Amazon, and I should make $97 from this put because my average cost per share, 100 shares, is 97 cents. So it's $100, $97 on Amazon. So hopefully that's what happens. By Friday, the share price of Amazon stays above $230. So that's a weekly call that I sold earlier this week. I believe it was on Tuesday. And then today I sold two calls, one on SPY and one on QQQ. And so I am going to be assigned the shares for SPY. So the put option I sold on SPY is unprofitable. I did not make any money on this put option. And so I will be assigned the shares. Here's the collateral, over $69,000. And I will be assigned the shares at an average cost of $691 per share. Do I have a problem with being assigned the shares? No, of course not. Absolutely not. There is no problem whatsoever. I don't mind owning the shares of SPY. So if we look over here at SPY, the current price of SPY is at $6.89, I believe, currently. So yeah, $6.89 and 79 cents currently. So I will be owning the shares at $6.91. So I will be owning the shares a little bit more expensive than they currently are valued at. And yeah, I have no problem with it because immediately tomorrow morning I will be selling a call on 100 shares of SPY. So if we open up here in options, and if we go to sell, because I want to sell a call, and we want to sell a call for tomorrow. And let's see how much I can potentially make on a call for tomorrow. So as you guys can see here, I would be selling this one here, basically, because I want to sell at least at my average cost, so I get all my money back, and a premium of 70 cents. Now, currently, this is probably the best option here. But of course, if the price of SPY goes up tomorrow, then these will become more valuable. This will become more valuable, and so will this one. So let's say that the price starts to head up, and the price even goes beyond $6.91, which is possible. It could happen. That means that it will probably be more favorable for me to sell this $6.92 call because the premium will be higher and there'll be $1 of upside. It'll be out of the money. Okay, so I'll be doing that tomorrow immediately as soon as market opens at 6:30 in the morning. At the same time, I will also be selling a put. Now, why will I be selling a put? The reason I'll be selling a put is because the put that I sold this morning on QQQ, that one was profitable. So I will be getting all of my collateral back from selling that put option on QQQ this morning. So at the same time, when I sell a covered call on SPY, I will also be selling a put on SPY. So this will be beneficial because I can sell a put for under my average cost. And this one looks pretty good right here, 94, a premium of 94 cents, which would be basically $94 in premium. at a strike price of 688. So if this were to happen, if I were to have to buy those shares for 688, that should reduce my average cost overall. Now, if I really want to reduce my average cost even much more, I can sell a put for a lower strike price and receive less of a premium. So depending on what the market does tomorrow, if it goes up, if it goes down, don't really know what it's going to do. But this is just some idea of what I'm going to be doing tomorrow. So if we look over at my put that I sold on QQQ, let's check that out. We could just see it right here on the side. If I open up QQQ, because QQQ didn't really go down like SPY did today. QQQ kind of held up a little bit better. And so I wasn't assigned the shares for QQQ, but I did sell a put on QQQ today. And so let me show you guys the profit that I made on QQQ. It's right here. I sold one contract and I should be making $78 on this contract. This collateral that was being or is being held for this contract, I will be receiving that collateral back. It doesn't. I thought it would show the collateral here somewhere, but it doesn't. So let me show you guys the collateral that's being held for these puts that are still, I guess, pending. So if we go to here and scroll down a little bit, as you guys can see here in buying power, there is this exclamation mark. Earlier today, I did get an email from Robinhood about the potential of getting a margin call. Okay. Now, am I worried about a margin call? Well, no, I'm not worried about a margin call. And I'll show you guys why I'm not worried about getting a margin call. But here's the collateral for the option. So about a little bit over $60,000 worth of this collateral will be given back to me. And so that's the money that I'm going to use to probably sell a put on SPY while simultaneously selling a call on SPY. Now, I may be doing that, or I may just sell another put on QQQ. So we'll see. I don't know. I don't know exactly what I'm going to do tomorrow. And so let me show you guys the reason why I am not worried about this potential margin call. The reason I'm not worried about it is because I have all the collateral right here in SGov. I have all the cash right here. I currently have over $217,000 in SGov. So if I need to, I can simply sell some SGov shares to bring up my margin buffer. So yeah, that's what I'll be doing tomorrow, depending on what the market does tomorrow. If the market goes up, great. If it doesn't, okay, whatever, right? Either way, I'll be selling a call, I'll be selling a put, and making some amount of money tomorrow. And so I started this fairly this week on Monday, and so far I've made about, I don't know, maybe like $400 this week so far. Yeah, it doesn't really compare to maybe some of these ETFs that I was purchasing before that pay a very, very high dividend, like for example, WPay. But let's look at WPay and see what's going on with WPay. Because I did buy a whole bunch of WPay. And WPay, let me show you guys how much I bought. I think it's probably still down here in history. If we look at the past history here, it doesn't show it any longer. But I owned, oh, I guess you can do it here. Let's see if it comes up. Let's see if it shows how much I owned in WPay and how many shares I owned, what price I bought them at when I bought a whole bunch of shares. So let's see here. Okay, right here. Check this out. I bought $70,000 worth of WPay. I owned over 1,000 shares of WPay at one point. I paid $53.90 for those shares. Okay. And of course, those shares just kept crashing. It just kept crashing and crashing and crashing. I did get some very high dividends from WPay. I believe here's one. Right, I was averaging about this amount in weekly payments from WPay. Right, but the price has since then just crashed and crashed and crashed. So yeah, I don't. You know what? I don't want to own something like that. You know, I just simply don't want to own something that just keeps going down. It seems to, kind of be flatlining here or consolidating here at 42. Let's take a look at that. If we look at the past week, it looks like it's maybe finally hitting a bottom right here. But who knows? I don't know. I don't know what it's going to do from here. But this looks pretty bad. I mean, let's look at the past year. Look at this. I bought it somewhere up here at the 53. So yeah, I'm glad I got out of it, because I would have lost a whole bunch of money, in value. And is this gonna come back? I have no idea. I don't know if it's gonna make a comeback. It might make a comeback, maybe, but I really don't know. Is this the bottom? Because now it's kind of, holding here its value like in between 42 and 43. It's just going sideways here now, so I don't know. But I don't think I want to own something like this anymore. I do like, for example, some of the other ETFs that I was buying is SPY I. I did that wrong. Okay, it's SPY I. Now I do like SPY I from NEOS, because SPY I from NEOS does have a pretty good, pretty decent price return. Not too bad. Past 5 years, according to this, it's at 6%, I guess, right? 6%. So you know, if you would have bought this at the beginning, yeah, you didn't lose any money. You made some money in price return, and of course, all of the monthly income that you've received. So something like this isn't bad. I do like it, but I'm trying to do this myself on SPY. So that's what I'm going to be doing. I may purchase some SPY I and maybe QQQI, because I still have to do something with my income, right? I want to keep all my income from my job, so I'm going to have to do something with it. Don't know what I'm going to do with it yet, because I still want to keep all of my income and live off of margin. So there's still a way to, own something that just grows, I guess, and live off of margin. I probably will have to sell all of my SGov to be able to do that. So sometime this month, I probably will be selling all of my SGov once it reaches a top. Once it maybe goes back to here, 57, or once it goes back to, I don't know, maybe here, 70 or 67, 167. I own it for 133. So maybe I'll be selling it up here at this peak. And yeah, that's probably what I'm going to do. So thanks for watching. Please don't forget to like, share, and subscribe to my channel. I really would appreciate it. You guys have a great one. We'll catch you in the next video. God bless. Bye.